Let's take a look at what's going on across markets at the moment in the wake of all that central bank action last week. Peter McGuire joining some XM. Pete, a very good Monday morning to you. All right, yeah, it was a frenzy among central bankers last week, wasn't it? And I guess overall you could say perhaps a more dovish tone than had been expected. What do you think?
Well, good morning, Andrew. Yeah, it sure was. I mean, five central banks, and have a look what it did to currency markets. We saw sell-offs as far as some of the commodities. And just overall volatility, equities edged higher, and it was in some ways a non-eventful week, but a very eventful week if you look at the big themes across many of those different sectors.
Okay, so let's focus first on the Feds, and well, we took a look at the dot plots there, and 3 cuts now on the agenda until the end of the year. Let's just sort of play that out, see what we can expect and how the market reacted.
Well, I think it's going to be interesting. First off, do you get it off in June, considering that's where everyone's got their mindset of? And then how do they roll forward, considering you've got an election coming the end of October, start of November? So they're either going to be front loaded and they've got to be really in succession, you would think, June, July and August. Now, is that going to be how it rolls? Because it'd be very delicate to roll it, considering you've got election early November. So there's the first part of it. The second part is naturally what happens over the next 3 months leading into that time frame, Andrew, as far as energy costs, where do we go geopolitically, and all of those big moving parts coming together, and do we see blast off in June? We'll just have to wait and see.
All right. How has the US dollar reacted to that?
Well, it's been a nice bounce to the upside. It's 104.40. And considering where it was, going back to end of December, it's had a very strong move to the upside over that period of time. It's been very choppy, and even over this month, it's been quite volatile. So it's offering, I think, more opportunity going forward over the next leading into this week. I wouldn't be surprised to take maybe a high 104s out, quite simply because you're not going to see any change in yield. And the overall picture is going to be, I think, stronger dollar for the short term, and we'll just have to again see how that plays into when it, as far as a blast off from the Fed's point of view with rate cuts.
Pete, also a feature news of last week was the Bank of Japan finally following through, given so much speculation it was going to move. It did, ending its negative interest rate policy. What did we see in the yen as a result?
Well, you're at 151.4, Andrew, and it seems to have come under a fair bit of pressure. And this is where you've got to look at the big theme. Is the Bank of Japan prepared to look at intervention around that 150, 151 sort of handle? It hasn't done anything yet, and maybe we could see something in the short term. We're at I think it's a 3-decade low as far as the yen versus dollar. So I put my mind back to 86, 85 when it was 242. But anyway, that's a long time back. So it's all about, again, whether we see intervention, what the policy is going to be from the Bank of Japan moving forward over this early part of spring in Tokyo. Yep.
Pete, elsewhere, we also heard from the Bank of England. Once again, opening the door to a rate cut, so somewhat dovish. What did we see with the pound?
Yeah, exactly, Andrew. So it's still sitting at that 1.26, 1.27 sort of handle. And it's been a little bit choppy, but there hasn't been a great amount of, that's pound, Japanese yen, that chart. I'm referring to dollar. But where it runs at the big picture, I wouldn't be surprised to see that pound soften a little bit further in the short term. It's the economy's doing it fairly tough, and I think that's going to be an ongoing saga for them until you see some sort of action from their central bank as far as a rate cut policy.
All right, other currencies perhaps to make a mention of, the Kiwi, the Canadian, what are you seeing here?
Oh, those commodity currencies, I mean, they've been under pressure, us included at 65. So I think you're going to see, again, further softness across the New Zealand dollar versus US and Canadian dollar. It's going to be choppy, but I'm not seeing any great breakouts until we see something decisive, either from our central banks or the return of China stronger for longer, or some action from the Fed as far as dollar policy.
All right, what are you looking ahead to, Pete? Data-wise, quite a bit happening this week locally, at least Good reading on inflation, jobs, consumer confidence, retail trade.
Yep. All of that, Andrew. I mean, you keep a close eye on it and the impact it's going to have naturally to the internal economy. And, we're not doing, in the sense of things, it's pretty tough as far as rent's concerned and some of those key drivers for inflation. But overall, if you still want a job, it's relatively strong unemployment or strong employment for the unemployed. So that's a good sign. And we're just got to see how that impacts the markets. We've had a nice run up as far as the ASX, and the dollar's sitting, choppy. 65, 65 and a half, 66. So let's just see if those impacts impact the dollar moving forward. I think it's going to be a choppy week for currencies.
All right, we'll keep a look on that. And commodity-wise, oil, what are you seeing at the moment?
Well, it's been sold off and it's come under some pressure, Andrew. You're back around that $80.50 for WTI, 85 and a half for Brent. So they've come under sell-off, and some of that hot air has evaporated over the last couple of trading sessions. It was strong there for a week and a half, and it's choppy. We'll just have to wait and see the impact geopolitically from the Russia situation over the weekend, and whether those geopolitics roll into, energy prices. The jury's out at the moment, and it could spike it. So again, we've just got to see how the markets interpret that information later in the day.
And Bitcoin, that price has come off significantly. I gather there have been significant outflows to some of those ETFs.
Yeah, exactly. Again, the hot air was evaporated from it. It really was choppy. It sold down to 63 odd thousand, and it's back at just under 67 now. I looked at the market last night. I had to talk into Dubai, and it was at 11:30 last night, or 12 midnight. It was a 65.3. It's up 1,600 in that period of time. So it's on an upward trajectory, but we'll just see how it's, how it trades over the next couple of hours. But there's plenty of volatility if you want to trade it.